Okay, welcome dear students to our online conference. We are pleased to welcome Dr. Bora Erdamar from Turkey. He is assistant professor at Bahçeşehir University, Istanbul, and also he is director of the Blockchain Istanbul Center. Today he will talk about a hot topic of recent days, cryptocurrencies and Bitcoin. Once again, I would like to thank him for being with us and sharing his expertise with our students. And floor is yours, Ajam. Thank you.
Many thanks. So good evening to everyone. Many thanks also for the presentation. As it is mentioned, I'm the director of BlockchainIST Center, which stands for both Blockchain Istanbul Center and also blockchain as a profession like pianist. As this, it stands for BlockchainIST, which means the profession or the professionals of blockchain technology. So in that sense, this is the first and only R&D center in a university in Turkey, and hopefully, like in the examples of Europe and USA, there will be more R&D centers in Turkey, because we really think that this technology has a huge potential, and also, and especially for developing countries, investing in this technology, both in terms of human capital and actual capital, there will be huge returns for developments. So this evening, today, I would like to discuss with you about the potential of this technology with a story. So I will invite you to the beginning of this journey, which is not precisely or exactly the calendar beginning, but through the important moments for this technology and for crypto economics in general. So let me share the screen with you. So this paper, which is called now as the Bitcoin's white paper, is an openly shared paper which is now changing the world, actually. The name suggests that this is Bitcoin, a peer-to-peer electronic cash system with an unknown author, which is known only by a pseudonym called Satoshi Nakamoto. The most important thing about this paper is maybe the year which is this broadcasted, which is this published online, which is 2008. Well, 2008 is critical from many perspectives, especially through the financial crisis. And when you look at the newspapers headlines, you see that there are lots of disappointing news about central banks and about the financial system itself. Like there's a crisis on Wall Street, there are lots of bailout plans, and the politicians are debating on the size of the bailout plan, etc. And in that year, one of the most popular phrases in English was this: too big to fail, which was actually pointing out that people were trusting too much to financial institutions, especially the biggest ones. And unfortunately, this phrase, too big to fail, was disapproved by the actual news or by the actual politics. Lots of these too big to fail giant financial companies failed. And despite the bailout plans, and these bailout plans are essentially the transfer of the tax revenues from the USA citizens to these rescue plans to rescue these giant financial institutions, which were among the most responsible ones through the unnecessary risk management or misrisk management through the years of 2000s in general. For the details, it was triggered with a mortgage crisis, but of course it spread to other industries very rapidly, which affected millions of people, not only in USA, but throughout the world. So what's the connection? Why we refer to 2008 financial crisis when we talk about this white paper Bitcoin? So is this an artificial connection, or is it somehow more natural connection, or is it somehow embedded to this Bitcoin system? What is exactly Bitcoin? Or when we refer to cryptoeconomics, or when we refer to blockchain technology, what do we exactly mean? So I will try to discuss about it for a while. First of all, the title itself explains it very well in some sense. So it says it is a peer-to-peer system. So a peer-to-peer system means there is no intermediary agents, which means there is no third party in this cash system. So this is surprising because all of our financial system is actually through third parties, through these giant firms, through authorities, and especially the financially regulatory bodies. All the banking system relies on the politics of Fed and also the other central banks' monetary policies. So even the name, the title of this white paper is kind of surprising and striking in many senses. And not only the title, when you dig deeper inside of the system, you see some surprises there. Well, this is, let me just change the view this here. So this is actually the first block of blockchain. And here in this block, for you, it is now a piece of code, let's say. To the right hand side of this code, which is in the left, you see that the headlines of the Times is printed there. The Chancellor on brink of second bailout for banks, which is a headline from 2008 newspaper. So when we refer to the first block of blockchain, what do we mean? What is blockchain? What is a block? Well, of course, I will skip all the technical details, but in connection to the financial crisis of 2008, I will start with the main analogy of the bank accounts as a comparison and as a tool to describe you the essence of blockchain technology. When you want to open a bank account, well, you provide some identity information, and then basically the bank creates a registry for you, and then you have a kind of ledger, and sometimes in the actually older times, you were provided a printed copy of your ledger where you keep the records of your transactions. Especially in USA, the checkbooks are still used. It is not that much popular in Turkey or in some other countries, but all of the checkbooks and the printed ledgers have just one simple function, that you are recording your transaction information, financial transaction records. So when we talk about blockchain, first of all, of course, this is not a physical thing, it is a digital thing. In that sense, it is a database. And the biggest difference from the bank account registry records is this: there is no central keeping of the records on blockchain. Instead, whoever participates in the system actually building the system by becoming a node in the system. A node refers to just an agent or a part of a network system. So long story short, blockchain technology is a, first of all, network system type of database with the financial records kept through the nodes of the system. So in that sense, it is a decentralized database of financial records. So whenever you participate in blockchain, you are part of a network, and all of these financial records are spread through the copies of these financial records, and the network grows as long as people participate in it. So this growing not only helps to the data recording, but also about the security of the system. One of my favorite analogy is the basic principles of risk management. You need to actually all the time spread the risks by diversifying your portfolio, right? Or in more simpler terms, we always talk about that we shouldn't put all the eggs in the same basket. But 2008 showed everyone that our financial system is actually too much centralized. That phrase of too big to fail refers to the fact that actually many eggs are in just a couple of baskets. And when there's an issue with those baskets, when there's an issue with those banks, when there is a mismanagement of risk through the financial system, since it is too much centralized, it affects all of the financial network. In this case, it affects all of the world. Well, if this analogy of risk management and the importance of diversification and decentralization is clear, then one more time, we can interpret blockchain technology is actually the distributed copy of financial records in a network structure in a decentralized way, meaning that there is no central authority in blockchain technology, there is no third party in blockchain technology. Instead, as the name suggests, everything is carried on peers across agents, nodes, computers, or agents in game theoretic sense. And these agents or peers construct the network system in which the copies of all blockchain technology exists. So then the question arises, okay, if my financial records are recorded and kept in some other nodes, how can I sustain my privacy? How can we sustain the anonymity? So this is actually the technical side of the blockchain technology, but long story short, it is a system not only decentralized, but also satisfies the two main properties of anonymity and privacy at the same time. So when we have time, we will talk about it in detail later. So after 2008, now in these pandemic times, we are not looking to the first block of blockchain. Again, with an analogy, we can interpret the blocks of the blockchain like the pages of a notebook. So like just imagine a regular notebook where you take notes, then if it is provided by, if that notebook is provided by a bank, then that will be like the records of your financial transactions. That notebook keeps the records of your financial transactions. When it is blockchain, there is not only one single notebook, but that notebook is encrypted, and the copies of that encrypted notebook of financial records are existing and kept by all the nodes of the network. And since this financial systems is used by people the need for record of extra records, so that extra room, extra space in this notebook is needed. So there should be new pages constructed. Those new pages in a notebook refer to new blocks in blockchain technology. So with extreme simplification, you can interpret the number in the slides, which is 629,999. So it refers to the kind of page number. So it is the block number. And this block is mined, it is constructed in 11th of May, which was a critical date for blockchain technology. For the ones who are already familiar to the halving procedure, so that was the date. And with, of course, historical references to the first block. Now, in this page, in this block, the New York Times headline from that day is now printed in the block with $2.3 trillion of injection. Fed plans far exceeds its 2008 rescue. So the main message here is this: our financial system is not working perfectly. Far from it. Our financial system in the world, including, of course, USA, is not working well at all. So there are serious problems. And as long as things are tried to be managed in the central manner, without the participation of the citizens, it looks like these risks and these problems are fundamental. We need kind of an alternative financial system, which is the Manifesto of Bitcoin in that sense. So the very first paper, Bitcoin, a peer-to-peer electronic cash system, is in that sense actually an invitation to humanity, with the statement that there is another world possible where, with thanks to technology, there will be no need to central authorities or regulatory bodies, but instead, with this decentralized network structure, humanity can safely and securely record all the financial transactions, and this system might actually avoid the misrisk management, where agents, including institutions, can use it securely and safely. Well, at this moment, if the main merits of this technology is clear, of course, the immediate next question would be, is it perfect? Or is it fast? Or if it is that good, why it is not the fundamental part of our daily life transactions yet? Or will it be at some point? We will try to investigate these questions altogether. Well, in the pandemic times, now when you search Google with interest rates, for example, you will see that negative interest rates are mentioned a lot for UK, for USA, for Europe. So what's going on there? What's the meaning of a negative interest rate? Well, first of all, it means that things are not working well again for the financial system. Well, due to the pandemic times, with the rise of the unemployment, with the need for stimulus packages for the economy, well, lots of money is printed in the simplest term, which, of course, as the basic principles of economics suggests, when there is a supply of something is huge, it reduces its value. Well, interest rate in that sense is like price of money. And if you create lots of money, if you print lots of money, it, in the simplest term, decreases the value, which leads to even negative interest rates, especially for the long term. So this is also, in economic terms, signals that the monetary policies is at the edge right now. meaning that the central banks are in difficulty in creating the effectiveness of the monetary policies as planned. So there are two main policies, as you know, the fiscal policies and the monetary policies. Fiscal policies are all the time affecting for the medium run and the long run. The monetary policies are more rapid, and in that sense, we can make a comparison to the for example, painkillers and antibiotics. So the fiscal policies are like antibiotics, and the monetary policies are like painkillers, meaning that they are actually not giving the treatment, but they are reducing the symptoms. So this is another remark for everyone, that if we see negative interest rates throughout the world, so it means that monetary policies are about to lose their effectiveness. Of course, they need to be supported by fiscal policies, but by just simply through bailout packages, stimulus packages, there is always a limit. You cannot use painkillers for the long run. So then when we check The Economist or some other newspapers, especially beginning from April, we see that, well, China aims to launch the world's first official digital currency. And the news is old on purpose, because now China has the first pilot project of digital yuan. And this is actually distributed to citizens in Shenzhen area. And they are distributed through lottery system actually. And of course, also as a propaganda device, there are lots of videos where some citizens are going to the shopping stores, and through their mobile phones they are buying some grocery stuff through this digital yuan. So what's going on there? How can we compare a digital yuan or a digital currency with Bitcoin? So are they comparable? Are they similar, or are they totally different? Well, at the beginning, we said that the blockchain technology is actually the underlying infrastructure of a decentralized financial system, and Bitcoin is the unit of the transactions in this system, which means it is a unit, a financial monetary unit of a decentralized system. Well, here we talk about a digital yuan, which is essentially centralized because it is backed up with by a central bank, right? So this difference is actually crucial, and throughout the world, it is also a source of confusion. So the central bank digital currencies, CBDCs in general, are now becoming widespread. More than 80% of the central banks through the globe are now actually organizing lots of meetings. They form, or they have already formed, their study groups with lots of experts trying to understand the nature of cryptocurrencies, trying to understand and inspire from these cryptocurrencies, and trying to design the central versions of those. And this journey is not only specific to China or some other countries, but also through the pandemic times. We have seen this news through MIT Technology Review about a digital dollar is now in the agenda of Senate. It is discussed actually officially. And the main reason why digital dollar is discussed is through those stimulus packages, through these bailout packages in the pandemic times, it is now understood even better that there are lots of US citizens who are unbanked, meaning that they are not part of the banking system, which means that when the distribution of these bailout packages with the aim and goal of helping the households, it is not working efficiently, since there are lots of people who are not in the financial system, they cannot transfer these support mechanisms, these bailout packages to the citizens in the efficient way. So in that sense, the digital dollar, or more generally, the financial technology solutions are in the agenda of USA as well. Well, in Turkey, now we have also some official financial technology projects as well. One is especially promising. Well, for developing countries, not only for Turkey, but also for some others, gold is used as a store of value. And now with the participation of some banks, the official public institution which is responsible for the transfer of large amount of gold across the Turkish banks. Now they are also, first of all, defining a 24/7 transfer system for gold, especially across banks. And now they are also transferring this system to blockchain technology, trying to make it more decentralized and more safe and more stable. So what about the market structure? So are these projects are just for security and safety, or some with the motivation of some more efficiency, or is there a business value there? Well, this data and infographic with the source of global FinTech data, FinTech's database shows us that this population of unbanked people in USA is not a local problem, but it's a global problem. With the data of 2017, there are more than 1.7 billion adults who are not the part of the financial system. In the same report, it also shows the mobile phone ownership, especially the smartphones. And when you combine these two infographics, it gives you a striking news. It says that actually, remember the number of 1.7 billion, 2/3 of those 1.7 billion people of adults, they actually have a smartphone, meaning that the world population is already digitalized more than it is financialized. Meaning that if the firms or the public institution or the decentralized solutions like blockchain, they can help these unbanked adults through the phone, through the world, through the digital solution. And through the pandemics, now we see that it is not only helpful for keeping the financial records in a decentralized way with the proper risk management, in an anonymous and in a transparent way, in an encrypted network structure, but actually it can be used for also health records. Well, the Dutch government is now embracing blockchain technology to fight against pandemics, to monitor the medical supply chain. Similarly, Swiss companies are now piloting blockchain-based health certificates to address lockdowns. This is also through May. Now, the updated news through the records of vaccination to keep and to monitor who should be on schedule. Now, there are some pilot projects which are keeping the health records in blockchain, which not only helps the safety of the records, but also for cooperation, which is more than ever needed through the pandemic times. When humanity faces a global problem, we see that the coordination is the most important skill, even a merit for each institutions for all countries. Well, now it is maybe improving, but especially in the beginning of the pandemics, especially in Europe, we have seen some stories that the medical supplies from one country to another is sometimes intervened by another country with the kind of emergency need because of, again, lack of proper management of the supply chain. Well, also one of the biggest logistic companies of China, SF Express, they also deploys blockchain and big data to track medical goods supply. So beginning from the records of financial transactions, now the humanity is looking for use cases for blockchain technology, and health records, keeping health records is having huge potential. There are also some other sectors like energy, also education, also logistics, and some other industries which are trying to benefit from this decentralized record keeping system. I will skip this due to the time limit. Well, the recent development is now through giant technological companies. Well, the story began with a decentralized solution of cryptocurrencies with blockchain technology. By the way, as a note, there are now more than 7,000 cryptocurrencies, which are the financial units of these decentralized financial systems. So Bitcoin was just the first, which was established, let's say, in 2008, which is followed by 2015 Ethereum, which I will briefly mention soon. So these two giant decentralized solutions, Bitcoin and Ethereum, they have their own blockchain systems. And as I mentioned, there are actually more than 7,000 cryptocurrencies right now. Some of them are kind of derivatives of the existing blockchains. Some of them are having their own blockchain infrastructure. But the essence of all of these systems are the same, trying to create a network structure so that the participants in this network can build new financial systems with new business models. Of course, this potential attracted also giant technology companies. And last year, beginning with Facebook, now these technological companies are in the case of creating their own money projects. Especially, of course, I refer to digital currencies. So Libra was the first name about the digital currencies. And after it has been announced, there was a huge reaction across the central banks, starting with Central Bank of France. They have declared that if a technology company establishes its own digital currency, of course, it will affect and diminish the monetary policies of the central banks. And then in US Senate, there was an kind of interrogation of Mark Zuckerberg, and for a while the project is postponed, and now it is re-announced with another name of Diem. Well, this might be new for Facebook, but this digital currency initiatives are not new at all. In China, WeChat is actually integrated with its own digital payment system, so that like the WhatsApp chat application in China, people are not only using this WeChat application for sending messages, but also making actual payments through that instant messaging application. Well, Google Pay, Amazon Pay, also the other companies like Samsung, they are all preparing their own digital currency initiatives. And especially in this year, with the rise of digitalization everywhere, of course, it will be accompanied by new digital payment digital payment solutions. Well, a couple of resources for everyone, CoinMarketCap or CoinGecko. So you can check these resources for not only looking to the price movements of these cryptocurrencies, but with lots of statistics about cryptocurrencies. Another issue is now all of these cryptocurrencies, maybe they have started with like some niche areas, but now lots of large companies are now investing on them, not only on Bitcoin, but especially on Bitcoin, which led to an increased correlation with the SP 500 index and the Bitcoin prices, especially in pandemic times. Recently, you heard about Elon Musk tweeting about cryptocurrencies, and not only tweeting, but also investing, MicroStrategy, some raffle investment. So there are lots of giant companies and hedge funds as well, which are now allocating some cryptocurrencies as a part of their portfolio architecture, portfolio structure. So this is Vitalik Buterin. I have already referred to Ethereum. In 2015, it is now called as Blockchain 2.0. So Bitcoin was the financial unit of Blockchain 1.0. Now Ethereum is, or Ether is now the financial unit of Blockchain 2.0. And in this case, it is not the anonymity case like Satoshi Nakamoto. Vitalik Buterin is, well, a very well-known figure as an actual person. He is also, of course, communicating a lot about Ethereum project. Before, like with a couple of slides, I'm planning to end the presentation. So since last summer, now we can talk about a new movement in blockchain technology, which is called as decentralized finance. So please note the total value locked in decentralized finance. So around May again. So around May, this number was just $800 million. So I remember the time, which was around July, where we have celebrated that, oh, the total value locked in decentralized finance platforms, which are actually banking services, mostly based on Ethereum, but not only based on Ethereum. And by banking services, we are referring to lending and borrowing projects, investment projects, including the derivatives or stock prices, stocks, global wide, not only through the local countries. Decentralized exchanges where the investors are not only using the central exchanges to transfer and exchange cryptocurrencies, but now they can make lots of other more advanced investment opportunities. So this DeFi movement is starting with last summer. It reached more than $40 billion right now. So just in half a year, this DeFi movement, decentralized finance, actually improved a lot, and it has a huge potential. Anyone can check some extra projects and resources through defiprime.com as well. I have already mentioned about centralized cryptocurrencies alongside with decentralized ones. So these are rising like the new banks of this decentralized financial system, but to emphasize, these are centralized solutions, centralized exchanges. You might have some questions, so at this moment I will just stop here to interact with you if possible, and for any further questions and also comments, and about the projects of BlockchainIST Center. These are our main social media accounts. So I would like to thank you at this moment and stop here. Do you have any questions?
There are some questions in the chat box, sorry, Q&A box. If you can check it out, there are two questions.
One of the, so let me read loudly. My question is, by whom was it created? By Nurberk Darvishev, or who, what, which country at all, these blockchain, Bitcoin and others? Let me also read the second one. Thanks for the presentation. My question is, do you think that cryptocurrencies are useful for international trade? So both of them are important questions. Thanks for asking, first of all. Well, for Nurberk's question, when we talk about Bitcoin, as I mentioned, there are more than 7,000 cryptocurrencies right now. So Bitcoin is created by this anonymous person, Satoshi Nakamoto. But anonymity of this person is actually including its own and main message. There is no boss, there is no central authority. So the Satoshi Nakamoto is, I think, with that purpose, didn't reveal himself or herself. Of course, there are lots of conspiracy theories also about the identity. Some theories say that this is not a person, but even a firm, a company, or a couple of companies, etc. But for my humble opinion, I think it is very to the point that the identity is hidden, because it gives the message that, okay, he had created kind of, he or she or whatever, I mean, Satoshi created the infrastructure, but that infrastructure is meaningless and without any use, without the participation of the actual agents, people and institutions. Because as I mentioned, the blockchain system is in a network structure, and it is meaningful as it becomes more and more decentralized, meaning that, of course, when more agents participate in the system, it resembles that now we have more copies of those baskets carrying eggs. So eggs are financial transactions, baskets are the copies of all financial records. So the idea is belonging to Satoshi Nakamoto, but the project itself is belonging to the actual human beings or the computer systems participating in this system. So I think I could answer about the creator information, and there is no country in that sense behind it. Blockchain is a borderless system. As I already mentioned about blockchain 2.0, which is Ethereum, it is created by Vitalik Buterin, which is now a publicly known figure, but the same story is true for that. So without the users of Ethereum, without decentralization, Ethereum is also meaningless. So these are ideas, infrastructures, which are improved and enlarged and evolved to more efficient versions of those through the participation of extra nodes, which are parts of the network. Finally, apart from Bitcoin and Ethereum, thousands of cryptocurrency projects are now around, but none of them are actually at the decentralization level of Bitcoin and Ethereum yet. So there are some companies, or there are some group of people, there are some communities supporting some other cryptocurrencies as well, which you can briefly search through. the websites that I have already mentioned. So do I think the cryptocurrencies are useful for international trade? Of course, and this is not only my opinion. Well, USDC is now officially supported for international transactions by USA as well. So Coinbase and Circle Company, they are behind this USDC cryptocurrency. Well, in more formal terms, it's actually a digital currency. The main distinction is if it is decentralized, meaning that if there is no company or community or people, I shouldn't say community, if there is no authority behind that project, we call it as a cryptocurrency. On the other hand, if there is a firm or if there is a group of companies or if there is an institution behind those digital currencies, we call them as digital currency. So cryptocurrency if it is decentralized, digital currency if it is centralized. And USDC is in that sense a digital currency, which is already started to be used for international trade. So Koray's question, can governments stop the trade of cryptocurrencies through legislation in the future? Well, if we are clear in the distinction of cryptocurrencies and digital currencies, repeat one more time, cryptocurrencies are decentralized, digital currencies are centralized. So USDC, which is a stable coin backed up by a cryptocurrency exchange, a centralized exchange, and a company like Circle, or the projects like DM, or previously known as Libra through Facebook, or some CBDCs. By definition, all of those digital currencies, which are centralized projects, they can be stopped. They can be regulated easily, but this is not the case for cryptocurrencies, which are decentralized projects. And comparison with internet itself will be enlightening at this moment. There is no country in the world eligible to ban internet. Internet is there is another actually network structure protocol. Well, you know that it started around 1960s with also spread of local area networks, first of all, but essentially internet is a communication protocol and it will revolutionize communication at first. If we are now meeting each other right now in these pandemic times, well, this is due to the revolution in communication technologies through internet protocol. Blockchain is not a communication protocol, but it is a value transfer protocol. When you create value with the digital assets, then you need another protocol for this. So blockchain is that protocol. So you can ask questions by replacing the world with internet in that sense, because they are both network protocols, network structures. Can governments stop the internet through legislation in the future? Koray's question with the replacement of cryptocurrencies with internet? No, simply no, because it is in the network structure. So can governments stop the trade of cryptocurrencies? No, but of course there will be some regulations through central exchanges, but we have already mentioned about decentralized exchanges, decentralized protocols, more technical, but theoretically, since they're in network structure, well, it will not be possible. So after replying that, let me skip to the Butku's question. Sorry if I mispronounce it. What will happen if the crypto market fail? So let's define the failure of the markets. Well, first of all, I think we could make a distinction between the cryptocurrencies and the cryptocurrency markets and blockchain technology itself. So blockchain technology is the underlying infrastructure, very similar to internet protocol in that sense. Cryptocurrencies are the units, new financial currency candidates for the world. And at this moment, well, we are in 2021, and the Bitcoin is, in quotation mark, invented in 2008, right? So it is still very new. And in comparison to internet, talking about these cryptocurrencies and blockchain technology in 2021 is resembling to talking about internet in 1972, 73, so like 15 years in the simplest terms. So it is quite new. So the cryptocurrency markets are just about $1.7 trillion. Well, just the latest bailout packages around $1.9 trillion, right? So just the latest package for USA is, in terms of volume or size, is bigger than all of those more than 7,000 cryptocurrencies market. But we are talking a lot about these cryptocurrency markets because of its potential, because of its use case, because of its also the story or even ideology behind it, which is about the financial freedom and financial inclusion through the globe. So the failure of cryptocurrency markets can be, if we try to define it, it will be either a collapse in the prices, which is not a very big deal because due to the low volume, of course, those prices are speculative right now. And there are whales in terms of the crypto economics jargon, meaning that very big investors, through buying and selling, affecting and unfortunately sometimes manipulating these markets already. So in that sense, for my humble opinion, the cryptocurrency markets are actually not succeeded yet. So this, if it is speculative and if it can be manipulated, actually they are not perfectly established. So in that sense, this question is resembling that, or should be asked in a way that what will happen if the cryptocurrency markets succeed, because it hasn't not succeeded yet, but it is of course providing lots of promise and lots of potential. And when the cryptocurrency markets will be established, the answer is similar to the spread of the blockchain technology. When people own it, when people participate in the system, it will become more decentralized, meaning that the effect of whales, effect of big investors, effect of anyone will be marginalized. When the effect of any single agent is marginalized, it means that it is now more decentralized. Decentralization is established, meaning that the markets are also established. We are still in the very first era or period of these cryptocurrency markets. Hopefully I could provide the answer for also Utku's question. So Ali Mohammed's question: where can we buy Bitcoin, and initially how much one should invest in Bitcoin being on safe side? Well, it is very relevant to the previous question. So Bitcoin can be bought and sold through cryptocurrency exchanges. Just Google cryptocurrency exchanges. You will see, first of all, on Google results, some centralized exchanges, which is very important to note. Those centralized exchanges, I have already presented some of them in my slides. They are like firms, companies, there are some CEOs behind those centralized cryptocurrency exchanges. They are like the new form of banks in a cryptocurrency ecosystem. We have also now decentralized exchanges where the governance and the management of those exchanges are not through people or CEOs or companies, but through smart contracts, which is a technical concept due to especially the Ethereum blockchain, meaning that everything is ruled through the code, not through people or not through institutions or not through firms. So short answer, you can buy cryptocurrencies through exchanges, either centralized exchanges or decentralized exchanges. And initially, how much one should invest in Bitcoin being on safe side? So these are, as I mentioned in the previous question, these are still in baby steps. And since there is no regulation yet, and everyone is speculating also about the new coming regulations, which will be helpful in some sense, especially for the protection of the small investors. These cryptocurrencies prices are too much volatile. So these are risky assets, meaning that the investment in these cryptocurrencies should be made with this main message in your minds. So how would you invest on any risk assets? You shouldn't focus on only the revenue side or profit side, but risky means also potential for huge losses. So the main principle for investment on risk assets is actually not even a relative answer. You should invest in the amount that you can accept to lose all of them. So if you are okay to lose all of that money, then you are okay to invest on those cryptocurrencies. So that will be the safe side, Ali Mohammed. And diversification of the portfolio is another global principle, a fundamental principle for risk management. As I mentioned, there are more than 7,000 cryptocurrencies. If you are interested in investment in cryptocurrencies, you need to diversify your portfolio as well. So I think I could also answer Irfan's question. Many thanks for that. Caroline's question, what is the biggest disadvantage of crypto? Great question, Caroline. Many thanks. So volatility, first of all, and the confusion about it, because it is complicated. So I would say that will be the biggest disadvantage. And also human beings which are exploiting the complexity of these cryptocurrencies and blockchain technology as well. Once humanity sees a new technology and also a new product, there are always some people trying to exploit the complexity of that project. And there are also some people who are all the time trying to talk about the good side of it and about the potential of it. I think you all have seen the video about Bill Gates trying to trying to talk about the potential of internet, of course, many years ago in a late night show. I mean, just Google it, Bill Gates trying to explain internet. And I forgot who was the presenter of that late night show, but that person was teasing Bill Gates. Bill Gates was trying to talk about that, well, there will be internet with a huge potential, and that person, the host of the talk show, was kind of making jokes like, oh, you heard about radio, we use radio, why would we need internet in any time? Well, he was saying that, well, we can write emails, etc. Well, we have our very well established postal services. Who would ever write emails, etc. These type of questions. So this is similar for blockchain and cryptocurrencies, I presume, with one huge difference. Economics and investment and finance is involved, meaning that there are some companies or people who are making speculations and manipulations in the markets. I think this is the biggest disadvantage. But it also signals the solution: decentralization, decentralization, decentralization. As long as there is a boss or big player in the system, it will create noise. If it is adopted by populations, by countries, by people, it will become more decentralized. So any speculation or manipulation effect will be marginalized. Thank you. So Madeleine's question: thanks for the presentation. My question is, what will be one key advice to someone who is buying cryptocurrency for the first time? So make research. Do not invest on anything that you didn't understand at least the idea of it, and diversify. So those will be the main advices. And of course, invest only the amount that you are ready to lose. And also spend time. So especially for cryptocurrencies and blockchain, at this moment, time investment is even, I think, more important than the money investment. Have some research, trying to understand it, then you will, once you are in the stage that you can make your own decisions, then you are ready to be a player in the cryptocurrency markets. Hopefully we could discuss all of the questions with respect to the time limit as well. Hopefully we are in good shape. Any other questions or comments?
I think that's all, Hocam. Thank you again. Thank you very much for joining us today. And thank you, everyone, for joining us for this informative session, online event. So hope to host you again in another event for Bitcoin or any other topic. Thank you very much.
I thank you actually for the invitation. I'm honored actually. Many thanks, and many thanks for the listeners, for the audience, and for the excellent questions. Looking forward to meeting you again. Cheers. Good evening.
Thank you.